Good afternoon, ladies and gents, and welcome to the show this afternoon, where we are looking at a relatively stabilised market state structure today, as we have done as of late. I was hoping to come on here with some excitement about natural gas, but unfortunately it's actually tanking. We did go for a break of the high, and we did actually achieve a break of the high. Got to 4.908, but actually over the last 10 minutes it's come down pretty sharpish. Apart from that though, team, there's not much to report on. There's not much to report on. I've been spending my time behind the scenes, excluding obviously the work on the business and getting the name out there. Spending a lot of my time doing the year-end wrap on my positions, looking at if anything in particular needs rebalancing at the moment. I seem to be a little bit heavy in certain areas, so I'm trying to offset some of that money and place it elsewhere for contrarian view assets in anticipation of next year coming up. So it's usually a pretty long process. I spend a good sort of 4 to 5 weeks doing that, to be honest. It's kind of tentatively happening throughout the background. But in terms of the CFD markets, for what we focus on most of the time here, day to day, there is a real lack of anything, going on at the moment. I have been trying to think up until this point today of what I'm going to talk about. I didn't really come up with a great deal. I mean, there's just nothing to report on at this stage. There's no economic releases. There's nothing happening behind the scenes in terms of major equity news. Fixed income markets are stable at the moment because they're waiting for the next Fed interest rate decision, as is most of the other asset classes. It's a real slow burner. In all my years in the markets, honestly, I cannot remember the last time it was this quiet this early. I mean, it almost feels like the kind of Christmas period between Christmas Day and New Year's Day. It really does. Apart from natural gas, of course, which we're already in. Now, if you guys did miss my message, by the way, that is a confirmed move in the stop to 4.725, as you can see here, CSL. And we now lock in a 1 to 19.5 on that trade. Looking at the rest of them though at the moment, there's not a great deal more to report on. I mean, most of these trading assets at the moment, these are 1 minute time frames, of course. Euro CAD, finally hit TP, so that was good. That one came up and took that one out today. That was this afternoon around 12:30. And we've got a pretty decent knee-jerk reaction as of now for the potential for a short below this area. I mean, honestly, they probably would have already been in the trade had we had the pending order set up for it. But this does go perfectly in line with the market report expectations and our trading parameters. So yeah, it looks pretty good. It does. It looks pretty good. In an ideal world, the entry would have been possibly a little bit higher up, but in this most recent wave that we've had, we didn't really get the necessary breaker structure point generated any higher than where we are at the moment. So this is ultimately is high up in the move as you could take the short. So if we say take the trade when price action gets back down there, we're looking for a target profit back down at the lows at 161.80, and then you'd have your stop loss. I don't know. I mean, that's a static 1 to 4. We don't really want to do that. I'd probably say go for a 1 to 3. I think we'd be pretty good. Nice risk reward ratio, but we also get that nib in the stop loss there as well. Just add an extra layer of defense for the position, which makes sense on that. So this is a trade idea you guys could probably knock out with a market order soon enough. I mean, you can set up a pending order if you want. It doesn't really make any difference at this stage. We've broken into liquidity high enough as well for my liking. So we see all these highs here back in time. And it's definitely high enough for me. So yeah, I don't think that looks too bad at all. Maybe a 1 to 3, 1 to 2.9, something like that. It's definitely worth a stab. What else we got going on here at the moment? Euro NZD. No. No can do. No. No. Pound against the yen. Already completed the margin recently. Wondering if we could place that slightly higher. No, I don't trust it. Cable short though. I am interested in this one. We spoke about this yesterday, didn't we? Can't help but think that that's quite nice, and we need that big daily retest of 132.85. We get the breakout down here. Targeting 132.85. Stop loss around 13336. It's a lot of threes. And then maybe the continuation from that point on as well. If we look at the daily time frame in this, we looked at this one yesterday, remember? And the nice big point of inflection, big breaker structure, rebound, big breaker structure again, back on the other side of it. Look at the size of that bar from yesterday, guys. Huge breakout candlestick. Definitely think the next 48 hours is going to be price action retest mode. So I quite like that one. Yeah, not bad. Nope. Nope. NZD/JPY. I don't really want to take a second attempt on that one. No, I'm not going to risk it. I'm not going to risk it. Haven't got the returns this week to be able to go a bit cowboy on some of these trades. Sometimes we take some pretty wild positions based purely on the fact that we've got a good string of winners, but we just don't this week. None of these markets are looking nice, are they? I mean, no, I don't think anybody can say that these markets look great for trading at the moment. Still looking at that Aussie CAD short potential in there. All right, how's our US crude doing? Whoops. There's our US crude. So we did come up to that point really nicely. We broke structure yesterday about 4:30. And so far, we're at break even. It came down. It did do all right. It did do okay. It got to about maybe 40, I'd say 50, sorry, 54. Maybe 53, 54% of the target profit. And then reversed, came back up, and now we've been situated break even for, well, the entire day. All day from around 6 a.m. So not much to note on that one right now. Yesterday's US markets were pretty slow to begin with, but we did end up getting a breakout in the afternoon, later in the afternoon, I might add. So the S&P 500 I got a good short in, and the US 30 Dow Jones took some time, but we did get there in the end for a 1 to 2.2. The eventual move as well, which was post-US lunch break, so heading into the end of the US Open, or heading into the beginning of the US close, should I say, was not bad. We got this big extended move up here. This was coming to the end of the move. So that was good. The NAS 100 as well. And the NAS 100 was it was pretty choppy, to be honest. Didn't get anything on that one. No trades at all. But the S&P 500 managed to get a short. And that was there. So yeah, not bad. There was the decent long as well after the open. That took place at 3 p.m. So we had the long up there, and then we had the short back down, which was quite decent. I mean, we had a long after that as well, right the way back up to the top of the margin. And that wasn't even that late in the day. That was at quarter past 3 it started. Ended at 3:30, 15 minutes basically. So to be honest with you, not bad. But that's about it. Yeah, that's about it. So I was wondering, now that we got a fair few people in the group. Good afternoon, Corton. I was wondering how you guys would think or find, apart from Wednesday, so it would just be a longer afternoon session on the Wednesday. But whilst there's not a great deal to discuss, would you all prefer a shorter session? So, sort of a 15-minute market recap in the morning and then another one in the afternoon for the month of December. Or at least, whenever we're streaming throughout the month of December and Christmas time. Obviously, we're all going to be taking a bit of a break around Christmas for the holidays. But how do you guys feel about that? The thing I'm finding, obviously, is, it gets to quarter to 2, 20 to 2, and I'm not really sure what to discuss. And there's no point making making stuff up. so yeah, just wanted to. I mean, if I come on in the morning, then I can provide you guys with a little bit of a setup for the day ahead. 15-minute recap, see what's going on, see what happened in the Asia session, and then back again in the afternoon. Jump on, hammer out the US markets, get set up for the US Open, and then leave it there. You guys got any kind of disposition of that? Think it's a good idea? Not a good idea? No idea at all. I don't mind, honestly. It's no skin off my teeth. It's just while things are really quiet at the moment in the market. I was saying, whilst things are so quiet in the markets at the moment, whilst there's no economic releases happening, there's no news, and the markets are very range bound, and it's very, very stereotypical year-end price action, which is basically, let's not bother trading and spend time with friends and family. Shall I split the stream and do a short market recap in the morning? So hop on at 9 a.m, do a quick market recap, hammer out, a couple of trades, see if there's anything going on, give you guys a sort of a guide on what's going on for the day ahead, and then come back on at 1:30 for another 15-minute session where we hammer out the US markets and get you guys prepared for the US Open, and split the session over the day. Just because the thing is what I was saying, Cora Tim, is I was struggling to. When there's nothing to talk about, there's nothing to talk about, right? So it just becomes a little bit difficult doing spending a 45 minutes to an hour in the afternoon when there's not much to, well, frankly, when there's not much to say, Yeah, exactly. Yeah, that's right. Well, I mean, you can still get it on catch up though, Cortum. All the sessions are recorded for the most part, and the odd one or two obviously get broken with technical difficulties, but for the most part they're all recorded, so you'll be able to get it on catch up. Maybe spend 10 minutes going over some break structure variations or psychology tips. Yeah, definitely, mate. Yeah, definitely. Look, I always, I like going over stuff like that. Absolutely. What I would tend to prefer doing, however, is to have that content dedicated in workshop style things, only for the reason that down the line it becomes very beneficial for individuals who want to see that stuff. Because if you do 10 minutes of a subject here or 10 minutes there, it gets lost in the masses of the daily market analysis and the market insights. So that's the only thing I would say about that. If it happens naturally, then it is what it is. Fair enough. But I do like to keep the content a little bit separated, just a little bit, because then it makes it easier for everyone else who wants to go and view it down the line. But yeah, look, we need to do the US Open anyway, so we'll do the US markets now. We'll get those done. US 30 Dow, NAS, and the S&P. If we are looking at all three of them today, probably not, because the S&P is trading inside of liquidity. I think, I think some of these days we'll have to split the sessions. Just to create a little bit more of a, I don't know, just a little bit more dynamic content inside the room, rather than coming on in the afternoon, just doing the afternoon and kind of getting gone in the space of 15 minutes. It's just how to give you guys as much as possible, really, because at the end of the day, if the content's not there to be discussed, if it's not happening in real time, then what can you do, right? We got the workshops anyway. We've got the workshop next Wednesday. That's going to be a good workshop on entries, breaker structure points, fine-tuning entry analysis, and so on and so forth. So that one's going to be a big one. That'll be a good hour plus on that one. So make sure you got that one scheduled in. For those of you who can make it, great. If you can't, that will be, of course, uploaded afterwards, so you can get it on catch-up. And yeah, we'll see what we can do. I mean, sometimes in the mornings, the FX Open, the European FX Open at least, has been a little bit more effective than the US. And we've seen actually, some of these good moves that we have seen in the FX space have actually started off, earlier hours of the day. Not mega early hours, but a little bit. I mean, this one here, for example, this pound CAD trade, this was at 11 a.m. this morning. So apart from the correction in this case, which was okay, that really nice breakout that we had there, well, that's already been and gone since we were up. Look at this move here. This is the FX Open in Europe. So we come down here, and right at this area in here is where the market opens. 10 past 8. We got this really nice big surge in momentum. Had this nice corrective. And then we get ready for the second leg, which is this one here. So there's definitely, that's just one example, but we can definitely find more of them as well. Yeah, 20 past 10 this morning, USD CAD. This move here, look at that. There's some good price action. So I'm thinking coming on in the morning might be quite prudent for the, next couple of weeks, just whilst we get Christmas out of the way. See if we can ramp up some opportunities in the European session as well as the US. We'll give it a go. We'll see how it works. If it doesn't work, then we can go back. It's fine. It's easy. Right, let's have a check out of the US indices then. So US 30 Dow Jones, we've got ranging market, same old. At the end of a very nice move to the upside, I must admit, but today has been completely flatlined. We do, however, have the opportunity here to get the breaker structure for the short back down to yesterday's point of liquidity, which would be ultimately where price action should be heading. This is the main point of inflection. The continuation, we've got the breakout, we've got the close above. It now needs to complete the BCR with the part of the part of the process that is the retest. So I'm thinking this afternoon a short in the Dow Jones below this level, targeting at here at around 47.78, with our stop loss probably at around 47.907 for a 1 to 2.5. That would make for a relatively solid shorting opportunity. Now the second trade idea is the long, and I'm thinking a breaker structure around there would be good to take the market back up to the range highs. What I do want to say though is that if this one is to work, we need this level in here hit first. So the market would break down into liquidity, reject, and then head back above. So that's the kind of thing I'd be looking for there. And that one's going to yield around about a 1 to 2.85. It might be a little bit, I'd say comfortably a 1 to 2.6. So neither of those trade ideas are too bad at all. I like both of them. If the market moves like it did yesterday, it shouldn't be much of a problem for it, but we'll have to wait and see. So let's get that one downloaded. Next up, we got the NAS 100. Margins sit exactly the same as they did yesterday on this one. Nothing really needs to be changed. So we can highlight from there. Whoops. There. Nice range today, as is the case with most of the instruments. We've got breaker structure points for the longs, which that's going to sit around there. Just like the US 30 Dow Jones, we need to see the low hit officially first before we consider buying back in. So that's going to be this area in here. That's going to be a long for around about a 1 to 2.82, possibly. I say possibly. We don't know exactly the way things go. We obviously can't see the spread and stuff yet, so it would be around about that. But that's quite decent. For the potential short, honestly, guys, just recycle yesterday's analysis. There's no need to change anything. So if it's a short, it's a breakdown below here, targeting 25,505. Stop loss is going to be at 25,581. Again, yielding around a 1 to 2.5 to a 1 to 3. Let's have a look at that. Just get it locked in. So target and stop loss 1 to 3.35 on that one. You may find yourself getting in a little bit lower than that, maybe at a 1 to 3. So again, not bad at all. Makes you wonder, do we even need the S&P today? I really don't like the S&P for the sake that it's trading inside a liquidity point right now. It's not trading above or below it, which means it needs to do work before we get interested. So it ultimately needs to get a breakout of this level here. And probably not even just a breakout, maybe a break close and a retest of that level. Or it needs to work all the way back down here for the bearish breaker structure for the short. And then, once it does that, where are you going to take it to? Because the trading margin is, the real trading margin is between this level here and this level in here. So then it needs to drop from 68.64 down to 68.45 before you can even consider trading it. So I would say, looking at this one at the moment, I'd probably give the S&P a pass based on the fact that we have relatively decent trading taking place on the US 30 Dow and the NAS 100 today. Looking at this again, I would actually say that we've probably got that level in there for a bear breaker structure as well from the highs. So if the market rallies all the way back and then rejects the highs up there, you will have the opportunity to short from the high back down to there quite comfortably. So I mean, even having a 1 to 2.6, let's say you go for a 1 to 2.4, that's going to give you a stop loss that exceeds 90% of the highs of the market. So that's actually a really nice trade in there as well. And I will add that in as an additional. But remember, in order to take that trade, the market will need to come up to liquidity and then reject it first. So you will need to see, you will need to see that level there. Yep, Cora Tim, yeah, no problem at all. Let me just download that for you guys. There we go. Right, let's check out silver. See potential for a short. Okay, let's have a look at this then. So we've got an inverted head and shoulders, it appears. Shoulder 1, head, shoulder 2. 15-minute time frame, let's have a look. I'm not entirely sure, my friend. I'm not entirely sure about that. I see the margin available from 57 down to 56.64. But personally, I would find that a little bit tight on silver with the inclusion of the spreads. Where are you looking? What are you looking at? Under 56.3. Okay, so you're looking at the break structure of the big 15-minute level, and they're looking to target somewhere down here, for example. Right, so no pun intended, but the big short. Well, yes. Yeah, I completely agree with you, mate. I completely agree with you. Yeah. So, yeah, nothing as of yet. But certainly, as you quite aptly said, the potential for a short is there. It certainly is. Because that level is the inflection point that was generated there on the 13th of November. Which yielded one hell of a push back down. So, if we're looking at trend dynamics, we go up to the daily time frame here and we look at the trend dynamics. We've got a solid double top. We have a nice big structural break above. And what are we lacking? Everybody in the room knows it. We're lacking one major thing. The retest, right? So that's the only part of the process that we're missing now. This was actually quite a nice ascending wedge that we had going on here. Very, very strong breakout pattern on the daily time frame. Look at that, right? So we had the nice pattern generated. We had the really beautiful breakout as a result of it. Now we need to see the retest of that anchor point before we get the continuation to the upside. So I agree. I think that's a really nice call, Corton. Yeah, I do. It's a really nice call. I've already taken credit for well, taken credit. I didn't actually. I gave a generous shout out, but I've already taken a trade of another member in here this week, Scotty D's cable, which was arguably the best trade I've taken this week. If the second best trade I take is a silver from another one of my members here, I'll be out the job. But nevertheless, more minds the better. We all put our minds together. Yeah, more brains are better than one. So I like it. Not bad at all, mate. Haha, there we go. See, that's what I like. Everybody take note. Nice little compliment. Always helps grease the wheels. Oh dear. All right then, team. Well, I'm going to wrap things up there then. We have got the US markets dialed in. We know what we're doing with that. Hopefully, we'll get a couple of decent trades off. We've got a couple of bits and pieces going on the FX space as well. Of course, I will upload the opportunities to you in the UTCF alerts momentarily. And yeah, that's about it. Take it easy now, guys. It's been a big year. It's been a busy year. And now's the time to start taking the foot off the gas a little bit and going with the flow. Going with the flow of the markets. Not forcing anything. Not forcing any trades. Not forcing any undue stress on your accounts. You know, this is when the markets come to their stage of quietening down and cooling off. And it's the perfect opportunity for us to all to do the same. Time to rest a little bit and catch up on some of those other things that have been left by the wayside. Usually personal relaxation, I suppose, for most people. So take it easy out there, guys. Have a good day today. Good luck at the US markets. Let me know how you get on, please. I do like to see how things are going, for good or for bad. And yeah, let's hit it off tomorrow. Remember, tomorrow's a morning session anyway, guys. It is Friday, so we've got morning session anyway tomorrow. And then hopefully heading into next week, we've got a few more economic releases to get excited about and market drivers that will hopefully shape up some sentiment for us. So take care, guys. Have a good one, and I'll see you then. Thanks a lot. Bye-bye.